This is the Japanese yen, the weekly chart. And as we talked about earlier or previously, the currency is in a correction pattern. We mentioned a possible triangle, uh, which pretty much is still sort of in play. I think we said that the triangle would be something like this. And I did break it on the downside, but then went right back into it. Though, as it is right now and how it's starting to play out, it seems that with everything that has happened in Europe, the currency is actually broke that level of support that we talked about, even though it's sort of went back into it. It looks like it's actually not creating a a new line of support right here. So I'm going to delete this and move that line right here. So even though now it has pretty much it's pretty much ranging between those two lines right here. Um, it's hard to tell where it's gonna go. It is still in a possible retracement, and if it is still in a possible retracement, then we need to figure out well how low it can be and where could be the important level. A couple of things to notice on the weekly chart is that we actually have a potential double bottom that was created. The bottom double bottom created is I will draw it pretty much here, here, and this line here, or more like that, but let's say put it here, make it easier, would be where it would be validated here or here at that level. To be safe, probably we take the highest level, 121.67, to make it happening. So basically, this would be between 507 to 600 pip objective. So two things can happen. If the currency goes back up and break that level here, then then it would basically resume a move up, and that congestions area here that we've seen for the past couple of months actually would have just been, as we say, just a corrective move to go back to the upside. A retracement can still be a corrective move, and it does not mean that the currency is changing trend. Now let's try to figure out which level the currency could actually retrace back, and to do that we're going to use Fibonacci's. So we're going to trace a Fibonacci from here to this level here, and it's on the weekly chart, so we are going to do it in red, so we know that it is weekly. And we realize that this level 38.2 is the previous level of congestion or base that was created, so the currency could actually go back to that level. Okay. Also, the 38 coincide with level of trend dragon support and resistance right here, and right here. Okay. So if we go to the daily chart, and let's make it a little bit better, we can actually draw some Fibonacci's as well. From this base here to this base here. That's not what I wanted. And we'll do it in blue, so we know that it is a daily chart. We know that the currency can, on the daily, from this move here to this move here, the previous high, low and high, the currency could actually go down to the 38.2 level or the 50% level, potentially to the 78.6 level. If it breaks that level, well, right now it seems that if it breaks that level of support, it should at least go to the 38.2% level and still be considered a retracement. We can also draw another one from here to here, and then we realize that basically there are different levels that are important. That 38.2 level is important. Those two lines are together. 38.2 is basically the retracement where the currency is right now. That was the Dragon trend line from the last push up. Okay, so from this to this here, the currency has retraced to 38.2. If it goes down, it can retrace to the 50% level, which coincide to the 38.2% level from the previous bigger move. Okay, so this line here is important, as well as where the currency is right now. So what we'll do is we will draw a strong line at those levels here, and we'll make them black, so we'll understand those are Fibonacci's level. They could be very important level. So there's this level here, this level here. The 61.8 hasn't been touched, so the next level where there's more than one bar going together is this 61.8 from the big move and 78.6. So we can do this, and of course this level here from the start of the move up in 2012 until now, this level here, if the currency goes back to here from that move up, it will only be a retracement to the 38.2, and it is coincide with three other retracement, 100% retracement from the small move, 78.6% retracement from the second move, and from the big move 38% retracement. So this level would also be important, and if the currency goes back to those levels, it does not invalidate the retracement. Okay, so then after that we'll see what the currency will do from those levels anyway, because there's plenty of time. But at least we do have some idea of where the currency can be based on Fibonacci's, which also, as you may notice, coincide with the Fibonacci's retracement. If actually we go back to the weekly chart, that 61.8% retracement, which also is a 50% retracement from the previous move, coincide with the Dragon trend line on the weekly chart, which is quite important. So we do have some indication, different level that could be level of support and resistance, and when the market goes to those level, we certainly can expect some resistance at those levels as well. So I'm going to remove the Fibonacci. So when we remove the Fibonacci's and leave those levels that were significant, meaning meeting two or more Fibonacci's level, we actually have some really well-defined level of support and resistance, and they are pretty much at the same distance, each one of them, more or less, except for the lower one. Okay, so at that level here, we pretty much know, if we only look at the weekly chart, we pretty much know where would be our level. So just based on the weekly, we know that if the price breaks to that level here, it should actually go down to that level here. Okay, so that would be quite a nice, very nice, nice move. We'll calculate them after. Of course, conversely, if the upper level, the higher level is broken, then we know that either there's a confirmation of a double bottom, and it's going to resume a move up. Okay, how far up? We would have to go back to the monthly chart to see how, when was the last time the currency was so high, and we could expect the move to be at that level, at least go to that level, and then potentially go to the next level, right here. um, could also draw Fibonacci's to tell us that, but we're not going to do that right now. We'll see what happens. So the weekly chart and the monthly chart tells us pretty much how things are going to play out. So if we go to the daily chart, um, we already know that we have two levels of entry, and if we look at the daily chart, the daily chart has is trying to build up to go to the downside, though that level of 15 498 seems to be quite strong level of support. So if you look at the daily chart, the downside is still the same, the break of that level, and then you can expect about 180 170 pip move down. And you could also see that there is a little bit of a build up to the downside, though quite erratic and quite volatile. Right now the price is actually trying to go back up. So the easy way to play this is, of course, to wait for a break of the in the downside here. At the next level where you can enter long would be the break of this level here, which I would probably push the price back to the upper band, and in the hope of breaking it. So you would have a about 155 pip up, and you could expect it to go up, retrace, go up, probably hit that higher band again, retrace a little bit to push it back up, which would be probably the best case scenario to go long. In any case, the dollar is strong, is getting strength anyway in all the majors, and the Japanese yen is probably going to experience that. Okay. Conversely, we don't trade what we think, we trade what we see. If it breaks down under the 115 49.8, then potentially it will be the sign that the currency is actually going to drive down to those other level of retracement, which will not be detrimental to the long-term trend, but we'll just basically have a micro downtrend down to a level of retracement before going back up, and we have those levels already identified. So that's it for the Japanese yen. If you can trade daily, you may want to look at the hourly chart before making a decision of entry. And if you can, use Trend Dragon, Trend Line if you have them. If you don't, you can use the same level of support and resistance on those lower time frame. Anyway, if you have any questions, let me know.